Hey, what's happening all? It is Tuesday, the 23rd of April. I'm kind of head down last yesterday, going to be head down most of the day today. So it's really early in the morning. Markets just really are opening. So there's not a ton of activity going on, but I did want to show you. And also, we don't have a whole lot of news that's happened so far this week. I mean, there was nothing yesterday. Today is, new home sales is going to be about the only thing that's going to give us any real push one way or the other. Later in the week, though, is PCE. So that, more inflationary data, which we've been showing is going higher, which has not been helping mortgage-backed securities. Also, with the Fed coming on saying, hey, don't expect any rate cuts this year. Now, again, Fed rate cuts are very loosely tied to any influence over mortgage-backed securities. They don't actually influence the actual rate. They influence the overnight rate, well, not the long-term rates. It's where do people put their money that influence the long-term rates. So let's take a look at something real quick here. And this is where I'm kind of concerned about. So we're going to look at, of course, the bond charts. And when you start looking at these charts, we've been showing you these downward channels. But look at this part right here. This downward channel that I had drawn probably a couple of weeks ago, if not further back. I think once we start seeing this pattern, it's probably been about a month. I'll have to go back and look. I'm just going off of memory. Look at here, we're getting squeezed. We're bouncing off of the bottom part of this channel, and this is where we're at this morning, is the bottom part of the channel getting squeezed into this point here, this level of support, if you will. This is the one of the target points referenced by Sean in my Solano prediction chart, which is right here. Look at that. Right there, we're getting squeezed right into it. If we break below that one, look where our next fall is. Our next fall is going to be right here, 96.35. I'm going to go ahead and just show you that. Go back to this chart so you can see the squeeze. See the squeeze, right? Getting pushed into us. If we don't pop up in here and don't have this right up into the channel, we can see rates take a pretty good hit if we get squeezed below this. So I'm thinking this is kind of the angle we're playing. If this channel pretends to be actually becomes a ceiling with traders, we fall down in here, we can go back into this. This represented somewhere close to about 10%, 0 points for a real estate investor, or what we were getting is in the high eights with a point or two. So also look at what bank rates telling us. 30-year fixed mortgage 7.25, and this is behind. It's not caught up. It's probably closer to 7.3 right now. That's about the highest we'd seen in quite a bit. Something that you might want to be concerned about. So just kind of giving you guys this kind of data to work off of. Again, take a look here. This is our prediction. Going to break through this one at some point, go down to this target. This is the next target. And look where we're at. We're getting squeezed right onto it. So if you haven't locked, if you're debating between lenders and you have not locked, I think you're putting yourself at huge risk. Talk to whoever you're working with. Find out if you're locked. If you're not locked, you better pull the trigger. I'm kind of worried about that for anybody who's floating right now. Appreciate you guys. We'll talk to you soon.